Hello everyone, I am Chris. I run Elliott Wave Cafe. Welcome to the Macro Café here, where we take a look at some of these major markets. I'm going to do this a little bit different. We're going to take a look at the major US indexes. We'll take a look at sector spiders in the S&P 500, a little bit of a look at the world markets, commodities, and cryptos. Just to kind of give you my thoughts and my perspective on what's been going on in here. So the big question is, hey, do we have a bull market? Has it started? Do we have a bear market? Are we going to crash? What's going on in here? Because the markets are pretty ripped in the middle, right? We have a tug of war between growth, between value, between tech, artificial intelligence. Cryptos are not moving. What's going on in here? People are pretty, I think, split in their views about the overall market. I personally remain pretty bullish, actually very bullish. I'm probably going to start to pull back a little bit this week in some of my risk exposure and into this kind of growth, just to kind of, get myself back into a more of a neutral state. We've had a pretty good week last week, so historically and this week that's coming now, it's usually, not a very, very good week for the markets overall in May. But then once we move on to June and then into the summer, I think things are going to look, a little bit better in here. So anyway, I wanted to kind of give you my outlook and what's been going on and just to kind of do a quick review so you can see that who's the best performer year to date? Obviously, it's a triple Qs. This is a NASDAQ 100, right? There's a strong move into growth. And Wall Street actually has been moving since October last year, starting to kind of nibble into it and then accelerate, that exposure, and they started to drop value. And you can see in here clearly, right? We're almost 27% year to date in the triple Qs. Then you have the S&P 500 somewhere in the middle at about almost 10%, right? Not a bad move. Still pretty strong. And then you have the rest of the markets, which are a little bit weaker. You're taking a look at the Dow Jones Industrial, barely 1.6%. Taking a look at the Russell 2000, 1.38%. Then you take a look at the equal weight RSP, 1.65. And then you have kind of the value line index. That's also, barely 1%. So, more of the value stocks, mid caps, small caps, as you can see, they're not really doing well. The larger caps, larger growth caps are pulling this market forward. Now, it's way more than just 10 stocks that are pulling this market. We've done the work. We've looked inside, and started to count and look at the breadth. So it's a little bit better than what, some of the ultra bears out there would have you believe. But I agree, it's not a, full-on rally mode in all the markets. Will it happen? Remains to be seen, but I can show you a few things here that look interesting. So take a look at these kind of larger indexes that we have. So Wilshire 5000, and they've been in strong consolidation, let's say, since maybe February. We've had a pretty good rally in January, then in February pulled back, and then we've gone nowhere, let's say, for the, better part of April, almost all of April, and a little bit in May. But we're starting to kind of crack above some of these kind of shorter term moving averages. Trend lines. So that's Wilshire 5000. Down here you have the New York Stock Exchange, right? That looks okay, like we're making higher lows. We haven't gotten into higher highs just yet, so it's almost like a triangle consolidation. We're looking for an explosion out of here, so I want to see a move above that trend line. Same for the Dow Jones Composite, right? We have the Dow Jones Industrials, you have the transports and utilities all in there. There's 65 stocks that compose this index. Still struggling a little bit, but not making moves to the downside. And then you have the Russell 3000 in here starting to break up, right? Very interesting move. All these markets, they're going to get, I think, way stronger, and we're going to get more participation the moment they're going to start to break above their August 2022 highs. Those were important highs. And if you see XLK moving higher, you got the Qs already breaking above those highs. So, a bunch of international markets are already above there, but there's still a few that are still struggling. Take a look at the Russell 2000, right? We're so far from February highs and then from August highs as well. But we are breaking above this downtrend line. And we haven't really broken below the trend line that comes from the lows, right? They would have that would have been a signal that we might continue to kind of crash downwards. Now, it's not a super impulsive move out of here. It's almost like a three-wave move, but you have a break. You're coming in, retest a little bit. So, I'm encouraged, but slightly cautious still on this part of the market. And then, value composite line here is kind of the same. This is the medium value of a stock in the U.S. So when you look at these larger markets, right, the picture is still very much flat without a lot of movement. A lot of it's happening into these growth stocks, right? Participating in this, I think, remains, remains a good positioning. I mean, yeah, they could start to pull back. Maybe they're a little frothy in here and we're going to get some pullbacks. But, the Wall Street in here is kind of showing you what they prefer, why they prefer growth versus value. Why are they moving so aggressively into these stocks? There's a lot of explanation. People, way smarter than me when it comes to macro and analyzing, rates and employment and, all these macro factors that are below. I can probably explain this, but I know one thing. I'm watching price and I'm following price and I'm following trends. So, I go where these guys go, and so far it's been pretty good. Now, take a look at the major US indexes in here. Again, take a look at the NASDAQ 100, break into the upside, pretty good move. Take a look at the top 100 stocks. Again, just continuing to push higher. And I'm watching this kind of longer term moving average. I want the prices to be above it for me to be bullish. And I want to look at this kind of smaller, charts. And what I'm looking for basically is for these moving averages to trend upwards. So take a look at the Wilshire 5000, right? It's starting to kind of move to the upside. Some of them are still flat, like small caps, a little bit flat, transports, just tilting higher a little bit in here. Mid caps still kind of flat. So I would get more bullish on these areas of the market the moment the price breaks above it. And, the 10-day starts to move back above the 150. So the 10-week above the above the 30-week. And then, then I can get a bit more aggressive on that, on those areas of the market. But for now, I'll continue to stick with these guys, which proved to be the kind of the right move. I mean, look at the NASDAQ, right? That's the August highs from last year, and we have closed above it. Oh yeah, pretty good move. A little bit far, again, from this 30-week moving average. So, it's stalling a little bit here, maybe even pulling back. It would not surprise me. But overall, I think that trend will continue. Take a look at the sector spiders. Again, XLC, moving higher as communication. Discretionary after a 1, 2, 3, 4 weeks of almost no movement into this sector, starting to kind of break to the upside. You take a look at technology, again, just after a big consolidation above this kind of 10-week EMA, and starting to push higher. And then you have your other sectors, which is real estate, not that good. Materials pushing back. You got even industrial struggling. You got some healthcare. And then, energy, I'm not a big fan of it. I think the funds have been starting to move out of these sectors back into more growth-oriented sectors. And then staples, after they had a pretty good performance, March and April, starting to pull back a little bit. Now, personally, I'm going to be moving out of some of these, higher growth, at least for this upcoming week, into something that's a little bit more defensive. So maybe a bit more healthcare, a bit more staples, just to kind of maybe a bit more value, because I think, that we might be getting slightly into a period of maybe just a slight kind of, just a slight pullback, and just, I think that the excitement in here got a little bit too much, and I think the market could actually, even though, it's possible that it continues, but I think the market has a little bit of a cunning way to punish traders that are coming just now into the market and saying, oh my goodness, this stuff is breaking out, it's AI, it's all of that, and I can start to jump into it. So I want to be just slightly aware of that. So if it continues, fine, we have exposure, but I think that maybe some of these breakout levels could be retested, right? So that's kind of what I'm looking at. Now, take a look at the world markets. Netherlands moving pretty good. Take a look at Brazil starting to break out of there. The French markets are looking good. German DAX pushing higher. Look at Nikkei. Look at this guy. right? Straight up. So, the other markets across the globe are telling you that, there is an appetite for equities. Now, yeah, you have, the Mexican stock market has been doing pretty well, just kind of pulling back slightly. You still have China struggling in here. The Indian market, it's, it made these kind of new all-time highs pull back, still continues to look pretty good. I think, the trend in here is to the upside, so I would not, I don't think I would fade anything here until we're starting to break back below these moving averages. Until then, I would stay looking higher, so it's pretty encouraging. Look at the Australia as well, pretty nice hammer out of there. Again, German DAX, look at this guy, right? I think it's going to be making new all-time highs if it hasn't already done so. I think it did. So, do you think that the U.S. markets will just kind of, crash when you see all these other ones pushing back to the upside? I don't know. There might be some outperformance out of the international markets, but I don't think the U.S. markets are just going to lay the arms down and say, no, we're not, we're not moving there. So that's why I like to see what's going on around the globe. Take a look at some commodities really quickly. You can see cocoa pushing to the upside. Oil is still kind of struggling. Copper has been pulling back. I think there might be some interesting setups in terms of an Elliott perspective in the copper markets. Corn straight down, soybeans down. Nat gas, it's still kind of interesting. In here it could create a base, and I'm looking for it to see if we can squeeze some more upside, maybe up into the $3 mark, into the natural gas. Gold and this stuff has been pulling back. I don't really like that. I don't like those markets to the bullish side. I think people have gotten a little bit too excited on the gold side, and we're going to continue to pull back. Again, I provide daily updates on our service. So take a look at the link below, and you'll see, all the Elliott Wave counts, all the daily videos, and all the portfolios and everything that we do there at Elliott Wave Café. But overall, commodities are still, more in a pullback mode, especially with the inflation coming down. There's not a, huge excitement into this market. Sugar was one that was doing pretty well, and it looks like we're stalling in here. So there might be one more push, but then I think we're gonna start to pull back. Now, take a look at crypto, and these markets are not that healthy. With the exception of a few that are still kind of trending on this kind of red lines. Like look at Litecoin. It looks pretty decent, supported by the 30-week moving average. Which other one? I think maybe, Bitcoin is still looking pretty okay in here, although it might continue to correct. But the other ones, they still look pretty sick. So we take a look at Aave. Right, just coming back. ADA is being supported a little bit, but this was almost looks like a fake breakout out of there. Algo pushing back down. Atom, AVAX. Look at the moving averages. Not that many are pushing to the upside. Most of them are pointing lower. Right, so you got Ethereum in here that's coming back into some more of a, let's say, value buy zone. Again, Litecoin, like I said, but look, IOTA, Near, Solana, Stellar, maybe XRP a little bit in here, kind of from the 30-week moving average, a little bit of a support, but you don't see the excitement in the crypto land. So I don't know. It almost looks like they want to take these things to zero on these altcoins, and maybe we'll have just a few left over, like might have the old kind of guys, Ethereum, Bitcoin, Litecoin, and then some of the larger ones. But the other ones are not giving us, too much of a healthy picture at the moment. It could reverse at any moment, but, there's no real rush in here to, jump into any of these, right? I want to see healthy trends, right? I want to see something that looks like this, where the moving average is pushing higher, the price is above it, and then, it gets retested, and then we get interest in it. I don't want to see any of this, kind of downtrending stuff. Look at this. And Algo, it's, I like this coin. It's kind of, it's a larger holding of mine, but yeah, you're coming back into some decent support, but the price has to respond and start to break some of these trend lines and get above the moving averages. Listen, I like more to buy them when you know, when the momentum is at our back, and you know, when you see that you know, that the price is actually starting to climb, then to try to pick these lows and continue to kind of get knocked or disappointed that they're not rallying. So in my view, you know, regarding crypto, I'm just kind of waiting for you know, much better signals on this. So anyway, that's it for today, guys. Hopefully this gave you a pretty you know, good overall view of kind of what's happening in the US, in the world, with the sectors, with some of the commodities and the cryptos. I remain pretty bullish. I think that the market has found a major low back in October, and that we're going to continue to trend higher. We just need some of these more markets to participate a little bit more. But, you know, my view continues to remain towards growth and, you know, further breakouts. I'm just going to send out the new ETF list for our members. And I'm working for the stocks of the week. They're going to be sending out later today. And if you want to try us out, you know, there's a link below the video. Check us out. Otherwise, I'll see you, I think, on Wednesday for another video or pick up a stock, and then you know, on Twitter. Don't forget to check us out there as well. So thanks for watching. Have a great week. Bye bye.